So I don't believe Bitcoin is driven by liquidity. At the end of the day, Bitcoin is being driven by... So I'm a big believer that the new QE going forward is artificial intelligence.
Jordi Visser is a trailblazing macro investor who's all over AI and Bitcoin.
He has dedicated his career to demystifying how artificial intelligence is reshaping markets, labor, and global macro, earning him recognition as one of the sharpest minds connecting finance and technology today.
Inequality has grown rapidly. I don't see it getting better over this. And again, this is one of the reasons why Bitcoin is only a $2 trillion asset. The S&P 500 is 60 trillion. Gold is close to 30 trillion. Bitcoin is a very, very cheap asset, which in my opinion replaces this inequality problem. I really do think it's going to be a very disruptive time for people managing their own money. You have to have a trading mentality.
Hey guys, welcome back to Less Noise, More Signal. And I'm also very honored to have Jordi Visser back on the show. Hey Jordi.
How you doing, Pascal?
Yes, I'm doing well. Yeah, everything is good on my side. Busy couple of days. As I just told you, I became a dad of twin boys, and it's a whole new chapter for me. But apart from this, everything's rolling. Everything's good.
Yeah, you're going to have more noise, less signal now. So
yes, yeah, that's for sure. But there's probably some signal in this as well, just to discover what it's like to be a dad, learn new things. I'm looking forward to this. I guess it's a whole new chapter, as I said. You can probably speak of this as well, having
yeah, I have
kids,
twin
right?
girls, so it's it's a good journey. So
Yes, yeah, very looking forward to this. Well, thanks again for jumping on. I mean, you've been somewhat of a rock star just lately, and especially congrats on your recent Substack piece that went viral on Bitcoin's IPO moment. Very well written. I enjoyed it a lot, and I guess it was just coming at the right time where the market was sort of feeling a little depressed and looking for some guidance in that sense. So that's definitely. How do you read this? Like the sort of claps and retweets that you got for the article.
Uh, I take pride in, I've been doing content since I was probably 28, so for 30 years now. And it started in Brazil. And what I learned back then, which was during the, the worst part of the emerging market crisis leading into LTCM, was that if you write content based on listening to what people want to hear, meaning you're listening to them and you provide content at a time, all the best content that's ever been produced, there's an element of it which is answering a question that people have in their mind when they're confused. And it doesn't matter whether it's regarded, crypto markets. I think life in general, economics, movies that come out at a given time become more popular because it's what people want to hear in their life at given times. I mean, a lot of the great movies that came out, in the last, let's say 20 years, my favorites were around the Great Depression and just, those underdog stories that took the country by surprise and uplifted people. And I just thought at the time that I was listening, honestly, to people whining and crying and sounding entitled with inside the crypto world. And I just thought it was important because I really do believe what I wrote, and I've got more behind it too. I'm going to write one this week that's going to be a follow-on piece, but this one will get more into the difference between the way people were talking about it and what I actually think they have to get to the heart of what's in there. And I think that's the attractiveness for me, is I have a very, very different view than anyone I meet with inside the crypto space of how this will eventually go through the network effects the same way that the internet did, and how it will boom. Maybe not in the same way that it has in terms of compounding since 2010, but certainly taking over more of the fiat assets, which I still believe is going to happen. So I do view this as kind of the IPO point. I've talked about this being the post.com bubble. I believe that too. And that means we're still in the very early stages of what should be a long bull market in crypto, in Bitcoin, in tokenization, in stable coins and everything. And I think we're still at the very early stages of it.
Mhm. Yes, I mean, It's just interesting because if I talk to people who've been in crypto for quite a while as well, they're kind of pointing out, well, I mean, we have all this positive news, that came ever since Trump got into office, and then we have all this positive regulation that's come our way. We have the ETFs, really the adoption by Wall Street, and so that's probably where they kind of were flabbergasted in the sense of like, why isn't the price higher? Because despite this positive news, and I guess you probably were arguing quite well that 2025 could be this distribution year. It might even go a little longer into 2026, who knows? But it's just sort of this great rotation, great distribution, just like an IPO moment, I guess, right? And so, yeah, that's just kind of what I find interesting. That even though we have this positive news, and that's probably why a lot of people were sort of um, disappointed as such, now that the price hasn't moved higher.
But again, it is higher.
That's the thing,
And
yeah.
that's the point, is that it wasn't high enough for people, and the frustration level was every time it looks like it's gonna break out, it pulls back. But, I mean, to be fair to everyone, I mean, it is up, and when we start this today, it is up 13, 14% year to date, which is as much as the S&P 500, which has been, helped by a massive AI bull market and profit margins expanding. And yet somehow or another, Bitcoin has still, in a disappointing year, held in there, and the year is not over yet. So I just think people, again, I really do think people have become a little bit complacent with the way it moves. And in a perfect world, like I wrote about, you want to see the correlation to risk assets come down. You want to see the volatility come down. You actually want, at a time when people are putting it into portfolios, for it not to be basically the NASDAQ. You want it to have its own kind of ability to move when the NASDAQ doesn't move. And that'll lead to better portfolio inclusion. And I think this year it's worked out well. And everyone I talk to on the financial advisory side, everyone I talk to on the banks, they're they're just increasing the adoption side. So I do think people have missed the post-dot-com bubble part of the paper that I wrote. I really do believe, if people look back, the entire space has not done well, except for Bitcoin, since 2021. And I just think people are mistaken how much damage was done from that bubble period, and how we're still working out of it. And it's a mature asset now, and stable coins are going to allow entrepreneurs to come back into the space that didn't exist in 2021, 2022. So the advancement of stable coins, the advancement of the government, the advancement that'll come next year in tokenization, just stick with it. Everything will be fine.
Imagine lowering your tax bill while stacking Bitcoin. With Blockware, you can. Thanks to new tax guidelines, you can write off 100% of your mining hardware costs in a single year. Blockware's mining as a service takes care of everything, so you can start mining Bitcoin effortlessly. Visit mining.blockwaresolutions.com/LNMS and get $100 off for your first miner.
Yes. Yeah, I mean, I know some true OGs from back in the day, having been here in Switzerland. We have a lot of them because they were flocking here early on. And I mean, some of them are like true libertarians, and that's why they got into Bitcoin. And they are making the argument, Bitcoin was born libertarian, anti-bank movement, really this digital embodiment of Occupy Wall Street for central bank skeptics. And now this spirit is sort of fading away, and they even argue that Bitcoin's price is reflecting this shift, and I don't know if it's true or not, but the question that I'm hearing then raised by some people that I work for at the bank, they are coming at it, looking at it, well, Bitcoin had this sort of philosophy, this spirit, this raison d'être, and this is sort of falling away. And why is it not sort of a betrayal of Bitcoin's roots, and why does it still matter now that it's being adopted by institutions and Wall Street?
That's all garbage. So sorry, to all the OGs out there. The internet was that too. Like, I don't think people truly know the difference between libertarian and democracy. And the way to make money off an asset is to actually have democracy, meaning democratization of this. So if you go back to the roots of the internet, you will hear the same thing from the people who created the internet and wanted to have decentralized information. Well, that decentralized information eventually led to the platforms and to the monetization. One of the ironic things is Peter Thiel, who made comments like this last year, he doesn't get wealthy and get to invest in Bitcoin with money if we don't have the evolution of the internet leading to all the things like PayPal and the things that eventually artificial intelligence, we made most of his money. This is all a progress of exponential innovation that started with the internet. The crypto manifesto that was written in 1988 before the Bitcoin white paper was in the same mindset of the internet. So I have viewed the benefit of Bitcoin as being not for educated people. The problem is with everyone that you mentioned, and I challenge you to find an OG. If they're an OG, they had money to put money in that was worth something back then. 99% of them were educated. They understood. They had the money to take the risk. The people that eventually benefit the most from this is the same thing as the internet. I lived in Brazil in 1997. I had to listen to that stupid AOL sound to get onto the internet. Most people in Brazil didn't have access to that. Well, now everyone has access to the internet. How did that come? Well, it came once we had mobile and everyone was able to have it on their smartphone. That took time. Same thing is happening with the adoption of crypto and the adoption of Bitcoin. The majority of people that use it in their daily lives that actually care about it are the people with the least amount of money. So 90% of the holders of it are below the age of the baby boomers. So this is a demographic thing that in the end, educated people benefited a lot from the early stage. And that's what the paper was about. You need the risk takers to get this going. Bitcoin could not have the ability of going to 10 trillion, 20 trillion, 30 trillion without all of the OGs that you mentioned putting their money on the line and taking a bet on something to help it grow. But the problem is you need to have the adoption stage. You actually need to have stable coins. You need to have the government supporting it. You need to actually have the ETFs. If not, the true libertarian get rid of government side, it's just not possible. So in the end, whether it's capitalism or whether it's decentralization, the framework between a libertarian belief and a democratization of the ability of people that have no money to buy a piece of private credit, a piece of an expensive building, a piece of Picasso art, that takes tokenization. The stable coins allow Argentines to move their money outside of the system. Bitcoin was never going to serve that purpose in my mind. You needed to have these other components. So I think this is actually going exactly the way it should. And people should start remembering that it's going to bring out the 7 billion people on the planet that have never participated in capitalism. They're the ones that are going to benefit from the democratization of both crypto and AI.
Mm. And in your mind, this is also going to keep on drive the adoption, in that sense, because like one thing that I could hear these OGs make and push back is that they're saying, well, it was Bitcoin's contrarian nature that also contributed to this portfolio diversification. It delivered and its risk adjusted returns, and now that this is falling away, this is not going to be the case anymore. And that's why then even BlackRock and other banks who care about this, they won't buy into Bitcoin anymore. But you're saying exactly, no, this is not true. It's like the secular adoption that's still in front of us by all these people that you just mentioned that will need to have Bitcoin, not out of luxury, but out of necessity. And this will drive the adoption and will make sure we will have these attractive risk adjusted returns going forward.
Again, this is garbage. It's very hard for me to sit here and listen to people talk about how this is correlated. It's correlated to one asset. Is it correlated to the Euro stocks? I mean, you live in Switzerland. How do the stock markets done there the last 30 years? This is not a correlation. Everyone picks the one thing. Everyone complains that there's concentration inside the S&P 500 because 7 or 8 names are driving the entire performance. Well, if 7 or 8 names are driving their performance, is Bitcoin correlated to the S&P 493? Of course not. Is it correlated to the Russell 2000? Of course not. And the reason I say of course not, if you invested your money in anything but the Mag 7 and you didn't have that in, everyone would be underperforming. Bonds have done horribly. Commodities have done horribly, except for gold recently. But if you take all commodities, particularly oil, you take anything, it's all underperformed. So Bitcoin has not only outperformed, it has been uncorrelated to all assets outside of the Mag 7. And that's the problem that comes in. And that is where, when people get caught in this game of statistics and correlations, they're just not paying attention to what's happened. Argentines and Brazilians and Vietnamese and everyone across the planet has not been in a bull market. It has been 7 stocks.
Yes, yes, I see. No, that makes sense to me. I mean, reading your piece, I did discuss this with some other colleagues of mine as well, and one of them raised the point, and I want to throw it at you as well. He was like, you wrote, if this were a macro-driven weakness, Bitcoin would be falling with risk assets, not diverging from them. And some of them of my colleagues were sort of trying to make the case here. What if Bitcoin is currently like leading global markets and maybe telling us that liquidity might be receding in 2026? And they're pointing to people like Howell and other liquidity experts, so to say. And so, why does this or why are you so sure that it's not driven by a macro-driven weakness, but just something else as you described it in your paper?
Because I don't believe Bitcoin is driven by liquidity.
Mm.
So,
Yeah.
I mean, again, at the end of the day, Bitcoin is being driven by the stock market. If we go back to the correlation, so if you believe that earnings per share in the S&P 500 is going to go higher, now historically that takes liquidity. So to all the liquidity people out there, I like listening to Michael Howell as well, but to me, it's all gobbledygook. We've been expanding the balance sheet forever and trying to time when the debasing governments of the world are going to let liquidity drop off. This has been a big liquidity year. I had heard at the beginning of the year that this would be a horrible liquidity year from so many people, including Michael Howell. So this just continues. Yes, there's a lot of treasuries expiring in the US. Yes, it's causing a little bit of liquidity problems at this point. But at the same point, we're going to do what we need to do in a midterm election to make sure that the economy is getting stronger. And whether it's a Democrat or Republican in the US, they will continue to print money. Whether it's China, they're continuing to do what they need to do. So I've broken that. I've left that alone. I left the dollar alone. I think what needs to happen for people, and the part that they need to get a little bit more comfortable with, is this thing that I wrote about for 22V, which is that the new QE is artificial intelligence. Artificial intelligence means doing more with less. I believe when money flows into crypto, there's a deleveraging part to it. If it leaves the fiat system and fractional reserve banking system, it's a less levered world. And I believe that is the ultimate point for Bitcoin, is for people to hide their money and take it out of the system. People have been moving money into money markets. They've been moving money into gold. They've been moving money into Bitcoin. To me, those are all deleveraging. Those are all anti-liquidity because there's not as much leverage that's going through the system. The natural leverage that I used to hear about during the 2010 to 2019 period that people said was a negative was money velocity. We had no money velocity. The money wasn't moving. There wasn't well, that continues to be a problem. Stable coins will bring massive amounts of velocity. So the speed of money will change. And I believe that's the change that's going to impact things, because AI is going to make us be able to do more with less. So I'm a big believer that the new QE going forward is artificial intelligence. You get tremendous amounts of operating leverage. We're seeing profit margins go up in the S&P 500. And as long as S&P 500 continues to have a bid in it, then all of the rest of the globe will have a bid in it in terms of the stock market, who are also benefiting from AI. And as we've talked about, if stocks are going higher, that's more money to transfer away from the fiat system into Bitcoin as part of the natural move, which will be the 7 billion people on the planet, which are going to continue to put money in. And don't forget the demographic shift and the transfer of wealth that's going to occur. You need the S&P 500 to be stable to up. And I think that's going to continue to be the case because of profit margins and because of artificial intelligence.
Hmm. Can you elaborate on this idea a little more, like comparing AI to QE? You called it the QE for the mind, and so your argument is basically there's going to be less debt as well, and just more operational leverage because AI. How does the argument work there?
So if you're cutting your expenses as opposed to revenues, you're getting the operating leverage on top of it. So basically what I said is, if you get the difference between a 5% revenue increase or a 5% cut in
Mm.
expenses, it's much better for your earnings per share to come from the cut in expenses than it is from the revenues. So the problem is for everyone, if we have no employees working, we have a $120 trillion economy, 60 trillion in compensation. Uh, I've managed businesses as the leader of the business since 1998 or 1997. And I can tell you, human beings are the most expensive part of the economy in terms of wages. And so if nobody had a job, which is not going to happen, you have an infinite profit. You have an infinite situation in the economy where productivity is basically not going because you have no expenses on the bottom side. I believe over the next 25 years, we will continue to see advancements in both a reduction in the need for people to work, a reduction in expenses in general, and that's going to lead to more profit margins that'll continue to go higher. And so QE did nothing except move rates down to zero. But moving rates
Mm.
down to zero did nothing to the economy in any big way. For the stock market, what it led to was financial engineering. So you could borrow money at zero. You could go buy back your stock, which had an earnings yield of about 6% plus dividends of say 2 or 3. So it was a 9% comparison to raising money at close to zero. So for companies, they did that and it helped the bull market go. It helped reduce their shares outstanding by buying them back, and that helped their earnings per share. So we're in a much more levered period if expenses go down, and that's where I think we are. And that contributes, again, in the circular nature to, well, that drives household net worth because the stock market goes higher. So far this year, the S&P is up about 13, 14% as we do this. It's a $60 trillion situation. Let's put it at 50. That means we added into net worth just from the stock market around the globe for the people that own it, about 13, 14 trillion dollars of net worth. As that becomes bigger and bigger, and it's already over 200% of the GDP of the US, you're getting that operating leverage showing up both in the form of the earnings per share, but also in the profit margins. And just to end this, remember, the S&P earnings this year right now are up about 12 to 13% year over year. Stock market's up 13% year over year. So the stock market's actually going up only at the multiple that the earnings are growing, and I think you're going to continue to see that. So that's where QE, which helped save the market by the stock market going higher, is going to continue to save it, but this time it's going to come through AI.
Discover the power of self-custody with Bitbox, the hardware wallet that combines privacy, precision, and world-class security. Whether you are a beginner or an advanced user, Bitbox offers user-friendly features and advanced options like coin control or optional passphrases. I have personally been using them for years, and so should you. Visit bitbox.swiss.lnms and get 5% off your first order.
Hmm. Yeah, it's a very interesting thought because, like, from what I'm hearing, this also kind of means that with this time, this QE actually filters through and trickles down into the actual real economy. And as you said, because last time I think it really just, if at all, pumped asset prices in the end, and it didn't really probably benefit the real economy that much, and that's why we've seen this financialization really take off ever since, or like even more in that sense. And so that's interesting that the real businesses will actually be impacted by this. Stable coins, you mentioned it as well. I read this amazing
Pascal,
paper.
before you go, this is one of those moments where I'm sure people are sitting there confused about one thing. So it won't trickle down. When you replace labor, you're obviously hurting people and the consumption side. So the consumption side is suffering in the United States right now when you look at 50% and lower in terms of the median voter, medium
Hmm.
income in the country. And that's why we have socialists being elected for mayors in cities. And the reason is because there's a lot of people that are not participating inside the global economy. In the end, if the stock market goes higher, a lot of those kids that are educated that do benefit. If mommy and daddy can give them money and support them, they're getting benefits to the stock market that way. But also, when mommy and daddy end up passing and the baby boomers start going through this, that money is going to be handed down. So there is an anger that's bred. I think there was a Peter Thiel email that floated around back on the internet this past weekend, which I highlighted in my weekly video, just showing that this problem has been in place. And he wrote that in January of 2020 before COVID. And the reason that's important is because the unemployment rate from the great financial crisis until 2020 had gone down from 10% to 3%. And yet educated young people were still angry and not participating. So this problem has been going on both with QE. It's got to go on with AI, but it was also happening that way because a lot of the exponential innovation that's been going on since the smartphone has already been disrupting the workforce. It allows people to go get a job, but it has really hurt the corporate ladder and it's hurt this. So I just want to make sure people realize this is not a positive thing for equality, but that's the reason why Bitcoin benefits so much, because you have the poor people not participate in the developing world, and in the developed world, the younger people below the age of 40 are not participating as well. They show up not in the same way that remittances and hiding their money is, but they show up in the trading element, the owning Bitcoin, trading it, and that fuel is necessary for these rises in Bitcoin to go up from 30, 40, 50%. Retail drives that in the developed world. It's the people that are putting money in there from a portfolio diversification and also hiding money from their government that continues to have a bid underneath that allows it to support when the OGs are selling out.
Mm. Yeah, great, great nuance, and great that you added this. I mean, in the end, this sounds to me that, yeah, it's the corporations that might be benefiting in that sense, and maybe then labor, yeah, is kind of left behind as well. Because I mean, I listened to this interview you did with Raoul Paul just recently, and there you made this very interesting point about AI already being so much more cost effective, and just like from a corporate viewpoint, yeah, it makes a lot more sense to train and hire an AI, an agent further down the line, and not go for the labor component. And this made me think about all the internships. I was able back in the day enter the workforce through an internship, which is like
Mhm.
a lower paid job, but still, I mean, it costs a lot. And they do all this work that can easily be done by agents in a couple of years, or maybe already now, and this is all going to fall away, and it makes it harder for these people to kind of enter then the workforce. And this is all these ripple effects. So yeah, I mean, that's going to be hard. So the question is really, how are we going to yank the steering wheel to get into the right direction, so to say? What's the solution here?
Well, I have a very I would say different take on how long this will take. So
Hmm.
it's already starting, meaning it's already impacting college graduates coming out. And that's because they believe that AI agents in the next, starting this year and then going forward, every year they'll get better and better. And it's very hard when you hire someone to then turn around and fire them. So that's why I think for the time being, this is a we're not going to hire anyone. But remember, we also have a demographic issue. So the labor force participation rate continues to decline. And in the developed world, what do we have a
Mm.
problem with? Shrinking population. And we're all kind of dealing with immigration in a different way. And I think that's going to continue. Immigration was a way for countries to try and offset the shrinking labor force. So they'll never say this in Europe. And in the US, it's not, let's say, publicly said. But one of the things that happens from a lack of hiring is you don't need to open your doors as much from an immigration perspective. And I think all countries now recognize this. You will not see this in public, but behind every door, there are politicians going, well, why would we let immigration come in if the math behind the way that GDP works isn't relevant anymore? Let's go back to the $120 trillion question. You have $120 trillion global GDP, and 60 trillion is labor expense. So it was thought not that long ago, 4 years ago, 5 years ago, 6 years ago, and including with the Biden administration, they opened the doors because we had an inflation problem, and they believed that excess labor would help bring down the cost. That is the way that governments thought about immigration. If you wanted to grow, you needed population growth. And if population growth stopped because you weren't having as many kids, which is the problem in most of the Western world, you end up in a situation where your demographics go down. So AI is just a natural force that will help. And the thing that people should start to pay attention, it's actually gonna take longer than 5 years for this to be a major problem. AI agents will come. The reason I talk to parents and I do a lot of consulting work, and I'll be providing videos on this, all kids, no matter their age, should be embracing AI and using it every day, because AI plus a human being is far more valuable than just AI. So I'm not a doom and gloomer. I believe this is going to take a good 15 to 20 years before we actually get to the point of true abundance where we don't need people to really work at all. If it takes 20 years, by that point, go through the demographics of the baby boomers. The youngest baby boomer, which was born in 1947, if we fast forward 20 years from now, guess what? The youngest one is 100. Well, that's a very different point. If they're alive at 100, then great. They're not working at 100. So you're going to have a very different situation than what it is. And I think people have to start paying attention. We're not going to increase the birth rates. We need to have these AI agents and these humanoids to do the work that we can't do. And I think the hours worked will come down. So I actually have a very, very optimistic view on this. I think we're in the dystopian phase where socialism will start to become the issue that the younger people want to vote for. And I talked about that in my video this week, where I think socialism is a growing part of what is normal, but in the end, capitalism and freedom will end up winning. And that's one of the reasons why I think Bitcoin is so important in this whole conversation.
Mm-hmm. Yeah, that's very interesting as well. I mean, I guess in the short term, it could also be that there will be a regulatory backlash at some point, but they won't be able to kind of stop it at the doorknob, because this is just going to rush through. But that's what I could imagine, that they want to stop the innovation from actually trickling through. Because I've heard of companies that like people who are doing translation work, this can easily already done today, way better by a machine, and you still kind of wouldn't let go of the person doing it, but just out of goodwill and maybe just because you feel like, you don't want to let that person go. So, but at some point, regulation won't be able to keep it out in that sense, right?
Yeah, they're trying already in the US via two
Yeah.
ways. One is just saying the models have to think a certain way, and we've seen some of these regulations go in place, particularly in Colorado. But that won't work because then people will just use Chinese models eventually, which will not have the same restrictions. And this is the issue that comes in. The second thing is, in the US, you're starting to get the issues with the data center. So if they have regulations on building data centers in states, then all the data centers will end up being built in red states, and blue states won't have any data centers. And then the people will migrate to the places that actually have the jobs in places like that. So one of the issues certainly that will help it be a 20-year process and not a 5-year process is the fact that if it gets too harsh and people do end up losing jobs and we have an unemployment rate that rises, there's no greater certainty in the next election than the current administration, meaning the current Republicans, losing to the Democrats. So in this country in particular, and around the globe, it's been whoever's been the most recent leader ends up getting voted out the next time, and you get a new party taking over. This is just a reflection of exponential innovation and the problem that comes down to the average person versus the wealthiest person. The inequality has grown rapidly. I don't see it getting better over this. And again, this is one of the reasons why Bitcoin is only a $2 trillion asset. The S&P 500 is 60 trillion. Gold is close to 30 trillion. Bitcoin is a very, very cheap asset, which in my opinion replaces this inequality problem. If you're betting against inequality and eventually for it to turn the other direction, which I think will, what has to happen is we have to have a decentralization. Part of the thing I say is that the Mag 7 has to be underperforming the global markets. We saw that in the early part of this year. I think we will see it going forward because of the spending that they're being forced to done, and the fact that there'll probably only be one winner out of this, or maybe two. And that means that the Mag 7 are no longer the only game in town. This is a theory that people also don't seem to either embrace or think about. But in my world, what will end up happening is Bitcoin will continue to go higher while the Mag 7 won't. And that's when that correlation will break down between the NDX and Bitcoin, and you'll start to see more of a correlation around foreign markets and Bitcoin.
Hey guys, I'm thrilled to share my new book, The Bitcoin Enlightenment, co-authored with Mexican billionaire Ricardo Salinas. Make sure you grab your copy now and learn about how one of the richest people in all of Latin America thinks about Bitcoin. You'll find the link in the show notes.
Mm-hmm. Interesting. You also mentioned that like a human in conjunction with AI, that's going to be very valuable. And in that sense, how will value of human work shift in general? That's something I'm trying to think as well. Because sometimes you hear in the age of AI, it's going to be emotional intelligence and stuff like this. That's going to be more valuable in that sense, and maybe get a market price or something. But how do you think about this? How do things change in that sense? Or is there going to be new jobs created in that sense that maybe don't have a market price just yet, or a value in that sense? Or any thoughts on this as well?
So I'm not sure I understand what you're looking for, but let me try to answer it anyway, and you can um, take what I said and go through it. So part of the thing that's important for people with this whole debate on AGI and ASI uh, gets into my own belief. So I use artificial intelligence. I'd say 7 6 7 hours a day. Let's say that's on the conservative side, and that's every day. That's 7 days a week. Um, I, I I write papers based on what I'm hearing from people. So it starts with what am I hearing from people? What am I listening to on podcasts? And I try to connect in some kind of a lateral thinking scenario, something that would be interesting to people from what I'm hearing from them, but also take what I'm hearing from intelligent people to connect the two. So part of this new paper Substack that I'm writing connects that point I mentioned at the beginning, which is on the one side, I heard recently Peter Thiel's remarks from last year be brought out again like they were new, which references the OG's libertarian views that this has kind of lost it, and this is the reason why it's consolidating, and it's actually making a peak to go down. On the flip side, I believe in democratization, and so I wanted to write a paper that now connects those two. AI can't do that yet. And what I mean is part of that comes from me listening to what people want answered. Unless you prompt AI, it's not there yet. So it's going to have to get to the point, and I don't think AGI gets it to that point. Maybe ASI does, but if you listen to Elon Musk and Andre Karpathy, which are the two people that I spend the most time kind of thinking about when this will happen, because I don't think they do it based on raising money, which Anthropic does. I don't believe they do it based on uh, some knowledge of things that doesn't involve vision. Their view of artificial intelligence to be able to do what humans does, it involves being able to see things, understand the way people think, and that gets back to your emotional intelligence side. I don't
Mhm.
know if we'll ever get to that point. So I do think there's a human plus machine element, which to me is not only critical, but will exist for a long time.
Mm. Yeah, exactly. That's what I wanted to ask. Like that's what my question was hinting at. Trying to think about the first, second, three order effects of what's happening once AI this sort of disrupts us humans in so many aspects because it's just better at it. There must be some spots and ways where AI is still falling behind, and that's where also maybe for entrepreneurs there's another sort of a business opportunity coming up, because there you can kind of connect to the real human again and bring him back into the picture because he can sort of work with the tools and still provide value in a way that an AI just solely or an AI agent can't do. So that's sort of what, yeah, I'm trying to
Yeah.
think as well.
Well, I mean, again, if you want to simplify things, so I'm much older than you, Pascal. Uh, how many TV shows do you watch on regular TV?
Well, none nowadays. I don't watch any TV anymore.
How much in a given week hours do you watch on YouTube or podcasts versus say Netflix?
I do a lot of YouTube and only podcasts. Hardly ever do I do Netflix. Yeah.
Okay. So
Okay.
I'm a lot older than you and I'm the same. I have not watched a single TV show in at least, I don't know, a few months since I was in Maine. And in Maine, it's a different story for me. I'm not, let's say, focused as much on the working. We both provide content. We provide content as an entrepreneurial thing. We don't do this purely for the fun of it. There's some entrepreneurial reason for it. And if we grow our audience, then that means people are liking what we're doing in some form. I want to teach people. I believe that my skill in life that I've gone through is I can simplify complex things and bring them to a level that have people understand them. The reason I bring that up is AI is not going to do that. We're seeing a rise in the ability for people to be entrepreneurs. Everyone on YouTube is an entrepreneur. This didn't exist a long time ago. So to be an entrepreneur, you know, 20 years ago was a very different thing. You can monetize it. You can put up a paywall. You can connect it to Stripe, and then it can be done through stable coins around the globe. The world is changing rapidly right now in the way business is done. And people above the age of 35, I don't think have much probability of being able to embrace that side. The reason I chose to do this is because AI makes my life easier. I don't have to hire any people. I don't have to use any people, but I can use the artificial intelligence to train people. I can make
Mhm.
my videos. So I'm doing this podcast. I have 4 others to do this week because of the viral nature of the paper last week. Um, and those requests came because the paper sparked some interest. If you do that continuously, AI can never replace that because then they want to have the follow-up conversation. What I wrote in the paper, which AI could have written, I guess, the timing of it was me, and then the explanation to go in depth into it in these podcasts is me. I can connect it to Milton Friedman. I can connect it to Joseph Schumpeter. I can connect it to a whole bunch of things. Peter Thiel, my time in Brazil, all of those things get inspired from that paper. AI is not capable of that because it's my own personal experience and it's bringing it out. So I do believe that we're in a completely different age and that if people embrace what is happening, it's a different world and it's changing rapidly.
Yeah, yeah, very good. Yeah, personal experience. That's probably a good keyword as well. It's just stuff that an AI they can have experiences in that sense, but it's just not personal, and that's probably what people kind of connect to as well, because that's again the emotional side of things, where you can kind of relate because you see it's another human who has experiences, and yeah, so interesting. Maybe I want to shift gears and just come back to this thing about stable coins and leverage, because that's something that interests me as well. You mentioned AI, cutting out the leverage, so to say, or just creating a new form of leverage in that sense. Stable coins, you mentioned it as well. It's this amazing paper by Caitlin Long where she argues like high natural velocity is stable coins are all about this, and they creating liquidity without leverage. And so I still work part-time at a bank, being a asset investment manager there. And obviously banks are the ones that operate on top of leverage. They extend credit, um, and leverage is sort of their bread and butter. Now, with these two forces, stablecoin and AI, taking the leverage out of the system, I'm wondering, like, yeah, how will banks change in all of this? Like from a big picture view, and then maybe also how does wealth management in general just be disrupted by AI?
Yeah, this is one of the more interesting, let's say, deep thoughts that I'm still working on in my head. And I'll take 2 things that you said, and I'll get to the bank, how the banks fit in. But this is all related to time. Um, and I remember when I first got involved in Bitcoin, and I listened to a lot with conversations with Michael Saylor. Time doesn't get brought up a lot with Bitcoin, but because of its compounding. Compounding is a time thing. It's a very important part of kind of time. Everything going on in life right now is just going faster. AI is speeding things up. Innovation is going faster. You've got exponential innovation. This is all related to time. Banks are involved in lending money for long durations when things used to not change. But now with change going rapidly, the whole banking thing and the whole debt thing, I always talk about the fact that I can't believe I've never read a paper, a single paper that has talked about how the global economy has changed so rapidly for the first time in the history of capitalism from 2007 to today, where the companies that became so large that they were bigger than every other country's GDP on the planet, The Mag 8 reached a peak of, I think, $24 trillion recently, when you include Broadcom as well. That is bigger than every GDP in the country except for in the world except for the United States. So those companies got to that level with no debt. That had never happened before. You needed debt to be able to grow your business. And so we already were seeing this kind of change in time, meaning people didn't need to take debt. The people that need to take debt, and this is ironic since Trump is floating the possibility of a 50-year mortgage in the US, this is how banks and administrations deal with time. Okay, we'll lend you money in this. This will reduce your costs now because it's for a longer time. The beauty of the change that's happening, in my opinion, is we don't need these things the way we did. Bitcoin operates fast. Caitlin Long is someone that everyone should listen to. I don't think I've met a more passionate person for the cause of fighting the government because she's a banking person and she's fighting the Fed and has lawsuits against them. She's the person people should pay attention to. And I've had the privilege of sitting in a room with her talking to some wealthy people about some of the things that she's been involved in. But I think her point is valid. If you go out and buy a house or, if you think about how much money around the globe is in illiquid assets that never change hands. I mean, think about castles in Europe and go out to, you've got plenty of places in Switzerland where you can go out, and I visited some of them. They don't no one's no they don't change hands. No one sells off any of them unless they're distressed. With tokenization, all of this money will become liquid immediately. If you want to sell a piece of it, you can sell a piece of it. If someone wants to buy a piece of a castle in Switzerland, they can buy it if someone puts it on chain. So I think we're about to enter in a world where at the same time that the gambling structure is going on, the prediction markets are going on, everything is about time, time, time. It's about speed and speed of velocity. And I think that's going to happen more and more. There's going to be more transactions around the world that are happening, and that's good for everybody involved.
How does this connect to your 100-year portfolio thesis? Because you had this article a while back, where you were also elaborating on this, because this goes into the time aspect as well, because yeah, I'm managing money at the bank as well. It's a 60-40 thing, that we're still doing. But I mean, at the same time, our bank is really all over longevity, and from what I'm hearing, what's coming there, it's going to be crazy, I mean, people are going to live longer for sure. I guess I will probably be longer living if I get my act together until 100 years. And so, yeah, I mean, then again, yeah, how does that need to change? Because it's so antiquated in that world that we're moving into in that sense.
Um, this gets back into if you believe in the concept of abundance, 100 years from now, uh, I have no idea what the concept of money will be. There's a difference between transactions and money. Um, transactions are exchange of something between people, and money is a concept where you need it to go buy things to live your life. You need shelter, you need whatever. I- If everything is free, which is what the definition of abundance is, and we have humanoids doing all of the work, then I think the concept of money is gone. And I think it's I don't know, and this is why whenever I write papers, um, Sapiens becomes like a book that I reference just because of the way he described that money is just a story. And if
Mhm.
everything is free, then you've broken the concept of the story. So I learned a long time ago that whatever we think is going to happen over the course of the next 25 years is way too long for me in guessing. I do know this: it is highly unlikely, if not impossible, for us to reach abundance with inside, let's say, 15 years. And I say that from listening to the great minds and then paying attention to the bottlenecks that exist. Uh, Part of getting to abundance is humanoids. You need to have humanoids to be able to get rid of all the ability for people to go, which is the only way costs can go to zero. And we don't have the construction allowed to create that many humanoids. Maybe eventually we will, but I don't think it's going to happen within the next 15 years. And that means that some assets are going to do well. What I do believe is going to happen in the next 3 years is I think people are going to realize that the competition for artificial intelligence destroys every, and I mean every public company. I do not believe that any public company is not hurt by the rise of artificial intelligence. And this goes for the reason why I'm, at the end of the day, called a Bitcoin maxi. Uh, I, I believe that you can invest in any kind of innovation, but as time shrinks, the time to go from an investable innovation to a non-investable innovation, which just means, can you capture the part where it goes up as much as Bitcoin has the last 17 years, or sorry, the last 15 years? I don't think you can anymore. If the time is compressed so long that you take a company like Cursor, is Cursor investable anymore? I don't know if it is. They may have reached their peak already, and they never went public. So I think we're going to enter a world where the time is going to go so fast. So for people out there, I've always said Bitcoin has a moat around it because it's the only thing with true scarcity. And in a world of abundance, you want to find the thing that has true scarcity. And Bitcoin is the only thing, in my opinion, that has true scarcity.
Yes, maybe one last question on Bitcoin then. I mean, because you discussed this as well with Raul in the podcast, mentioning that AI, at some point it will be so intelligent that maybe it's just going to be a math problem to kind of crack Bitcoin as well, thinking quantum computing and everything. How do you think about this? Do you see it as a threat as of now, or is this just still way out in the future? Or because like if you want to come back to Bitcoin, but then everything accelerates so fast, and as Raul I think said, it's just a math problem. You said it. Then at some point this will also be kind of crackable in that sense, And then where do we go from there if Bitcoin is not around anymore because it gets hacked?
Well, we're still 5 to 10 years away from getting to that point. And more importantly, I just learned a long time ago that when something is this obvious and people talk about it, it never happens. I hate to say this to everyone who loves to hear, like, you go name something in life that's happened that you got a 10-year warning on, and the people eventually didn't go to protect it. Here's what I'll say. In the same way at the beginning, I said it is ridiculous for OGs to complain about it losing its libertarian side. If that's the case, then you didn't want it to go to the size that it is. You just wanted to have it be a nothing, which is fine. In effect, it's like, okay, then just go find something else. But this is exactly what you wanted. It will tear down the governments. It will tear down corporations when connected to AI. I believe what has to happen, and what is like the most important thing of this, is that as this kind of moves forward, as governments get more involved with allowing it, as it grows and as it goes, guess what? If all of the banks and all the government have a vested interest in it, then guess what will happen? We'll find a better way to
Mm.
get the Bitcoin community to agree that quantum is coming, and we'll protect it in some form. There will be protection on Bitcoin because there'll be too many hands in the game that they all have a vested interest across the globe to protect their own people. And as the wealth gets bigger and bigger, which is what I expect to happen in it, there will be more reason to protect it as there's more collateral used in it, as JP Morgan's doing
Mm.
it, as UBS is doing it. There'll be more reason for the centralized parts of the world to protect that as well. And that's one of the positives that comes from this. So I'm not worried about the quantum thing.
Yeah, no, it makes total sense. In the end, like if things that are dynamic, that are facing challenges, in the end, this is where life is still livable, and things are still going to happen, and it's not static. And in that sense, it's also not dead, which is makes it so interesting. So, yeah, that's interesting. Well, Jordi, thanks a lot for putting up with my zigzagging here and just going through all these questions. And maybe last question. I mean, you when I did the research, I found this website, Visser Labs. I guess it's from you.
Mhm.
Nothing much on it, but you mentioned that you will help people navigate the future of investment and just how to use AI. What's coming from you? What can people look forward to, and how can they then also access this type of stuff?
Yeah, when I opened my LLC, the focus for me was on AI consulting and also helping people with crypto in terms of building out portfolios and stuff. And I started to go down the path of the website, but my focus was really on the content to start. And then I'd say right when everything was going, I got involved with 22V. And 22V is a macro boutique research firm. I spent most of my time on the consulting side with institutional clients at that point, but my gearing is now shifting, and they will have on their website a focal point for me on the way that I was going to build a paywall for the content that I have. So the goal was for me always to have a free Substack and a free YouTube so people could access my opinions, my brain for free and just take what they wanted out of it. If people actually want to get better at what they're doing and they want to take it another step, meaning helping them with the investment side. So not just giving them kind of the top-down view of what's happening in AI, but the specific names that they can get involved in, how they can build a portfolio out. Also on the artificial intelligence side, show them how they can use artificial intelligence to become empowered. All of that will be rolled out on a paywall on 22V. And that's kind of where the focal point has shifted, is I'm still doing the content. Nothing changes there for everyone who's gotten to know me and gotten to know the way that I think. But I think the most important thing I can do for people is actually help them learn how to use tools, how to build things on their own. And then in the case of the investment side, I really do think it's going to be a very disruptive time for people managing their own money. You have to have a trading mentality. NVIDIA is not going to last forever as a dominant force. You need to be able to move your money around and change things. I grew up a trader. I grew up in emerging markets where time always moved faster. You could go from bull market to bear market to bull market to bear market all within inside a year. The developed world doesn't normally move that fast. And I think that's the problem people are having, is they actually believed in this concept of cycles, which is another one of these time things. So everyone will have more access to me on 22V in the coming months. We'll roll that out probably in January is my guess. I've been working with them. It's been a good relationship. And so I'll get more time to spend with people in a different form. And then I'll be spending more time at conferences and going around and hopefully getting access to meeting the people that I've developed good relationships with online. So it's been a good time for me, Pascal. I've met you through this and a lot of other people that asked me to come on, let's say, before I had the amount of followers I do now. So I thank you, and I thank everyone that's watching. So.
Yes, thank you as well. Lots of food for thought for me again, and probably for listeners. Yeah, Jordi, thanks a lot for doing this. Looking forward to what's coming next. And yeah, I guess as you said, I mean, being a trader mentality, that's something I'm learning as well. And I guess this is something which will just accelerate in that world that we're moving into. So just great to have people like you and share all this knowledge with us, and people are grateful. Well, thanks. And yeah, hopefully we'll meet in real life anytime soon. And until then, have a great rest of your day.
Congratulations on the twins. So enjoy them.
Yes, I will. Thank you very much.
You got it.
Enjoy. Bye, Jordi.
Bye.